welcome back to the channel everyone. In today's video we're going to be discussing the smartest and best way, in my opinion, to manage prop firm accounts in 2025. So without further ado, let's just jump straight into today's topic. Now, the first thing you need to consider when taking the route of prop firms is your strategy and your edge, and the expectations of that strategy and edge. Because if for the past 2-3 months you've been not following your plan, breaking your rules, emotional trading, then is it really a smart thing to do to take a prop firm challenge? Likely not. And secondly, if your edge produces, say, on average 20% a year per annum, you have to align your expectations with the ability to pass challenges, and you have to manage that risk accordingly. So you can't just come into a challenge and expect to pass it, within a month if the average R of your strategy is 2 a month, right? So you have to align those expectations with your edge, and then with the fact that you're not necessarily going to pass it quickly, which is okay. That's fine. But you have to get comfortable with that. You have to be aware of that. Otherwise, you're going to self-sabotage yourself when you realize you haven't passed it in 1 month, 2 months, right? When you're seeing people on social media passing within a day, 1 week, whatever, you have to mentally align those expectations so you can properly manage your emotions during these challenges. And then following swiftly on is to manage your risk according to your edge. So I think I sort of covered this as well. Depending on your average risk to reward or your average R, that is going to dictate how much you risk per trade. Right? You also have to align the drawdowns as well. What does your average drawdown look like? How many losses in a row do you typically take? And then you have to align that with the risk that you're willing to take on the account. That also ties into the bankroll, right? How much do you have to invest in these challenges? How much can you afford to lose? And that whole premise is going to dictate how you approach the challenge and the types of challenges that you purchase. So not everyone is going to have 10,000 USD to invest in challenges. Some people might have 1,000, even 500, right? And so aligning your personal situation, your personal financial situation with your prop firm situation is really, really key, because you can very easily be drawn into emotional trading if you put your last $500 into, say, a 200K account, right? That's going to mess with your emotions drastically, especially if you've not built the correct mental framework and the psychological fixes in order to overcome those. Then you're just going to self-sabotage and have awful results and likely blow up. And this brings me on to my next point, is the fact that if you don't have investable capital, trading prop firms is not going to fix your financial situation, right? It's going to make things worse, because you're going to be far more emotional when it comes to money. You're going to be far more emotionally invested, and so you're going to make poorer decisions. And then you're just going to go in the spiral, this loop, this negative feedback loop, and you're just going to perform extremely poorly, and you're just not going to get anywhere. So first and foremost, if you don't have money to invest in prop firms, don't trade them, right? Sort your financial situation out first. Focus on steady income through a job or freelancing, whatever it may be. Focus on getting and securing somewhat of a decent income first. So let's look at bankroll, and let's sort of break down the different ways you can do this. So say you have $1,000 bankroll. there's two options you can do and two approaches you can take. The first one is to use all that bankroll to buy a challenge, which there or thereabouts is going to be a 200k challenge depending on the firm that you go with. Now, with this approach, you are far more likely to be emotionally invested in that challenge and thus more susceptible to fear, greed, and all those kinds of emotional cues and struggles. However, this can still work. This is fine to do if, again, you manage your expectations and you manage your risk. The last thing you want to do when you have just one challenge is to risk heavy, right? So maximum risk on this, you're going to be at least 1%. I wouldn't recommend any more. Now, the second approach is buying more smaller challenges. Now, again, this is going to be very dependent on your personal situation, your financial situation, your emotional situation, and your edge as well. If you take more trades, it's likely going to be a better decision to buy more challenges because sure, you might fail more, but your probabilities of passing, again, is going to be higher. So with this, if you have 4 challenges, you can afford technically to risk slightly higher. That means you're going to pass those challenges quicker, get to the funded stage quicker. Again, there's no right or wrong here in these scenarios. This is all going to be dependent on your personal situation, your financial situation, the edge that you have as well. That's why our edge expectations is at the beginning, because if you don't understand your edge, then how are you going to apply that in a prop firm challenge? So looking at my approach, how do I approach the prop firm challenges? Now, for me, I am quite happy to risk higher because I'm not heavily emotionally invested into these challenges. And so phase 1, I will typically risk between 1.5 and 2% risk. Phase 2, I'm going to slightly reduce my risk just because obviously the target is smaller and now we are closer to that funded stage. So I'm going anywhere between 1 and 1.5% risk. Now on funded, I'm going to be dropping the risk almost immediately to 0.5% risk. Now, why is this? The first thing you want to do when you get a funded account is to secure a payout. First and foremost, one payout, extract your initial investment, then the account is quote unquote risk-free, right? Because you've drawn out your initial investment, anything you make on that is just a plus. And anything you lose, you've not really lost anything because you've got your initial investment back. So until you get that initial investment back, I would stick to 0.5% risk. And then once you've extracted that initial investment, then you can start getting a bit crazy with it, if you like. Then payouts. What are you going to do with your payouts? Tax first and foremost. The tax man always gets you, right? Regardless, put money away to pay your taxes. You don't want to come to the end of the year and have a fat, juicy tax bill that you got to pay. The second thing is to invest in more challenges, right? Keep that train going. Keep that positive train going and, increase the size of the accounts you buy, increase your risk if your financial situation allows that, and then just repeat that cycle over and over again. So I hope this kind of made sense. Just remember that there's no right or wrong way to approach a challenge. So everyone on social media, they typically say, bro, you've been in a challenge for like 2 months. Like, what the hell are you doing? Ignore them, right? It doesn't matter, because who cares if it takes 3, 4, 5 months to get 100k funding? right, or 200k funding, that you can make a very decent return from 100k and a 200k account, even if it takes you 6 months, right? You can average 1 to 2 to 3% a month. That's a good side hustle, right? That's good extra bank in your wallet every month. So don't get drawn into this idea that you have to risk loads on a challenge, otherwise it's pointless, right? Because you got to understand that it's not always the smartest approach, especially for you in your circumstances. You have to understand your circumstances, your situation. Everyone is different. It's okay if you can afford to take a challenge once a week, fine. But if you can't, if you can afford to take a challenge once a month, fine. Or once every 2 months, fine. You just have to manage your expectations that territory comes with, and not get blown out and sucked into the social media craze that is gamifying these prop firms day in, day out. So I hope that video made sense. Hope you took some value from it. If you did, drop a comment below, like this video, and I'll catch you all in the next one.